Paul, thanks for joining us, man.
Yeah, thanks for having me. Excited to be here.
Absolutely, man. So Paul, I thought maybe we could just start briefly with what is Pantera, for all the students who don't know, who living under a rock.
Yeah, definitely.
And then after that, Paul, I was thinking we'd actually go through your background, because remember, we're basically talking to college kids here. And so I thought maybe starting from college to now and the decisions you made and all of that, maybe we do that after we talk about Pantera and what it is. Does that sound fun?
Awesome. So Pantera is an institutional fund manager focused just on cryptocurrencies and blockchain. So the fund was started actually by Dan Moorhead, who graduated from Princeton, civil engineering. He graduated from there and then went on to Goldman Sachs, and then he was the CFO and head of global macro trading at Tiger Management. And then from Tiger Management, he started a company and then his own hedge fund, Pantera Capital. Pantera Capital used to be a global macro hedge fund all the way up until, around 2008, 2009. And then in 2012, decided to refocus just on cryptocurrencies and blockchain. So the first entity that Pantera started was the Pantera Bitcoin Fund. It was really trying to solve a problem at the time where high net worth individuals and institutions were thinking of putting money into Bitcoin. But, at the time, Coinbase had $500 daily limits, and Dan figured, hey, we can allow people to get into Bitcoin just by investing into a fund and making it really seamless, getting K1s, having the security, the convenience, the trading, etc. And so he set that up with actually help with Pete Brigger, who is the CEO of Fortress Investment Group, and he's also a Princeton grad. And then Mike Novogratz was also pretty early in helping to start things up at Pantera. And then since then, we now manage 4 different types of vehicles. A Bitcoin fund that was investing into Bitcoin at $50, a VC fund that invests into mostly equity, and we also invest into early stage tokens. And then now we actually just started our newer blockchain fund, which is a VC fund that invests into all 3 strategies, early stage tokens, equity, and even just investing into public liquid tokens. So right now Pantera manages about $4 billion and we have about 70, 80 people.
And I love it, man. And something I'll add about Pantera, since you guys have supported me with my last project and now, which is I have always felt you guys are on the absolute bleeding edge of supporting founders and investing in projects. I think when a lot of venture capital and investment firms weren't even willing to do tokens, you guys were out there and you were really leading the charge. And I think that's something that's hard to really appreciate for the students. But I thought I'd mention that, having seen kind of the evolution and other funds kind of catching up and all of that. I think you guys really led the way.
Thank you.
So absolutely. So Paul, with that behind us, I thought maybe we could go through kind of your background, maybe starting from college if it's not too far back, and kind of decisions and how you thought about each decision. Maybe with the lens that they're going to have to start making decisions like this very soon.
Yeah, so I went to UC Berkeley, as you can tell with the hat that I'm wearing, and I'm a very proud Golden Bear. I actually studied psychology and political science. So I was thinking of going to law school, going out of college, and I, worked in a law firm for about a year and a half, and just decided that it wasn't for me. Similar to, I believe you worked in trading for a little bit, D.E. Shaw, and you probably figured that it wasn't quite for you. So I went and moved into finance. I went into consulting, did economic consulting for a little bit, and then also felt like, this just wasn't, something that was exciting to me. I really wanted to actually build something. I really wanted to make a difference. And while I got to build up some pretty good skill sets around, financial modeling and research, I really wanted to get into something earlier and really kind of get into the startup environment. So I actually started to work in business development and growth for an early stage startup on the side, just for equity. It wasn't even for any money. Really wanted to just build up that experience. And I think one of the coolest experiences was actually going to, TechCrunch demo day and really just, talking to a bunch of investors and entrepreneurs and really trying to pitch the product. And it was a kayak.com for daily deals at the time. So everyone knew about Living Social, everybody knew about Groupon, but what if you can have an experience where everything just kind of got aggregated and the best sort of deals got sort of thrown to you in a very pleasant email or mobile app to be able to digest everything. And so, I was doing that for a little bit, and then, I started to look for opportunities in the startup space, and I actually came across venture capital just from a job posting on LinkedIn. It was one of those things where, I didn't even know what it was, but I just knew about startups, and there was an opportunity here to, be a research analyst, be an analyst, and looking at a bunch of startups. And so, for me, that was my way of getting into startups in a deeper way, and into venture capital is really right at the beginning, joining as an analyst. And, I thought it was a great opportunity to be able to help a bunch of different companies and be able to look at things from a very, very high level. So I joined a fund called Strive Capital that was focused just on mobile. And I really think that set the stage for me because, being in venture capital, there's so many things that you have to do as, in terms of your job, that to be able to just look at one area, especially one area that was really early on, and really try to, just kind of figure out and market map the area and try to figure out where it's going. I think it was a good way to get started. And I got to learn from some serial entrepreneurs who really knew how to build companies. And we sort of learned the venture game, just kind of collectively together.
Man, that's super great. I think like something I really love is it sounds like essentially your first experience transitioning from working somewhere to really being part of a startup or something early stage was actually it's kind of a side hustle, it sounds like, where with very little risk or maybe even no risk, you were able to expose yourself to that by being this kind of part-time biz dev consultant, basically. I really love that as a strategy because I think something that's hard for a lot of students is they're in a track or some kind of career that they're a part of, and they think of it as, oh, I either have to leave and stop doing this, or I'm locked in and I'm never going to do startups. But it sounds like the half and half, or maybe a compromise is possible, and I think that's something that's really cool.
Yeah, I'll give you two examples that I'm seeing right now. I mean, I think I'm seeing entrepreneurs in this space really trying to learn about venture capital. So they are angel investing. They are advising companies. If they're a product manager, they're going out there and saying, hey, do you need product help? Let me consult. Let me just get my hands dirty, and then figure out really, how to, just like if you have a product, how do I sort of learn about providing really awesome customer reviews and that sort of thing. And those things go a long way in terms of investing. And something else that I do is, I always have one or two college interns working for me. I really feel like giving back. I mean, I think it's a great experience for folks in college to be able to help do research, help to come up with ideas on what's a good company, what's not, and maybe even go out there, help source deals, provide feedback on what's going on in terms of, I don't have one. I don't have one from Princeton, but I have one from Berkeley. I have one from Stanford. I have one from Harvard. So here's an opportunity right here. But I think it's great. There's a couple of different ways you can get involved with VCs because they can really guide interns, or even just like going on Twitter. I think that's also a great way these days to kind of get involved.
Yeah, I would say, Paul, you don't have one from Princeton yet, so we'll have to fix that. And I'll actually plus one, Jono, who's in the audience, works with us, and he started as an intern. And actually another person who started as one of our interns is our last speaker, Vishal, who worked with us as an intern when we were doing Basis, and then joined full-time and now has his own company from that experience. So
yeah, thank you. Actually, because of you, I invested into Vishal's company. So thank you very
no
much.
way! That's awesome.
Yeah,
so you
yeah.
invested in Stride. That's amazing.
Yeah, we co-led it. So yeah, I mean,
Incredible.
once we knew that he went through the internship experience and worked with you, we that already sort of checked the box in terms of team profile.
Oh, that's amazing, man. I'm glad that's working out. That's really awesome. So Paul, this is great. So to go back to your background just a little bit.
Yeah.
So you worked at Stride as a research analyst, and then at some point you had to go from Stride, which is mobile focused, into crypto.
Yeah.
So maybe you can talk about navigating that, because I'm sure that took a lot of conviction, right? Because you did it really early too, I think.
It did. I mean, I think it was in 2013 where my friend David at Lightspeed, he was telling me about crypto, and he was telling me about Bitcoin and Bitcoin mining, and I sort of got lost a little bit, because he was talking about a little bit more of the infrastructure side of things, where I really didn't actually understand Bitcoin yet. And it took a few months until finally where, we were fundraising for our next fund, and I just decided that I wanted to, at first I just wanted to just kind of work at a VC fund that was just looking at just some more spaces. I felt like mobile was great, but it was starting to get saturated, and wanted to kind of just find something that was just a little bit more cutting edge, a little bit more exciting. And I think I went and looked at what are some of the interesting YC startups in the last batch, and I saw Coinbase on there, and I was like, oh, that's interesting. Let me read a little bit more about Bitcoin and what's going on there. And so I started diving into Bitcoin. DeWallow was starting to do some stuff with Bitcoin. It was like a payments company. And, the more that I read about it, the more that I thought that, wow, this is something here. This could really sort of disrupt store value for the emerging markets. I was reading about what was going on in Argentina. And then, of course, I was reading about what it could do for payments. Mark Andreessen just wrote that New York Times piece about, why Bitcoin is interesting. And so I was thinking store value, payments, man, this could really just disrupt money and how we do things. And so, I just wanted to figure out a way to just get a little bit more exposure, get deeper. So I reached out, I talked to the guys at Coinbase, I thought about it, and this was when they were less than 10 people. So it would have been a great time to join. But, then actually a recruiter reached out and said, hey, this is kind of crazy, but have you heard about anything on Bitcoin? And I said, yes, actually, I've been reading up on it. This is such a coincidence. And she's like, well, yeah, this is hedge fund that's started by this former Tiger guy that's looking at Bitcoin, and they're trying to do Bitcoin venture capital. And I was like, venture capital, interesting. And, so early that when I started talking to Dan, I said, hey, I've been in the venture game a little bit, and as you know, you need money to make money. And in this particular sector, it's so early and it's so cutting edge that he can get the money. He just needs now someone to help him deploy it. And so I felt like I had the passion, and there's no one that has experience deploying venture capital into the space, but I've been able to figure out mobile pretty early on. I could probably figure out some of the areas that we need to invest for cryptocurrencies and Bitcoin. So, we felt like we had a good sort of complementary partnership. And then I went in there and I just said, hey, to make this decision, I'm early enough in my career. I think I was sort of in my, later, 27, 28 or something like that. And, is it worth making this jump in something that is so early and so foreign? To me, I said, yeah, I mean, I do this for a couple years. If it doesn't work, then I move on to something else. But, if this works, I mean, we could really sort of change how finance is done. And that's game changing, both from sort of a financial perspective, but also from a cultural perspective. And so for me, it was just the risk was worth taking. And I like to be able to get in when no one else is looking at something. So, kind of went into it and just kind of, felt like, this was the right opportunity.
Man, and I'll highlight a few things, which is first, I didn't even realize you were in so early in 2013. I mean, most people we talk to, they came in the 2017 bull market, but for everybody who doesn't know, 2013 is a really, really early time to get into crypto. I mean, to be in crypto now, having gone in 2013, you had to basically stomach the craziest, downturns and volatility. I mean, what it says about your conviction, Paul, I think is something really big. It's very interesting to me. I also just love that they called it Bitcoin venture capital when you started. I think that's another highlight of how early.
Exactly.
Because a lot of people don't know that when in 2013, really it was kind of just Bitcoin, right? There wasn't really much else going on. And so, Paul, maybe I'll ask one more riff on this topic, which is, how did you have the conviction to stay in crypto from 2013 till now with all the, I mean, I'll say this also, I've said this before, but people are saying the current bear market is hard or whatever. In my opinion, this is the easiest one. And all the other bear markets were much harder. So how did you, get through that?
Yeah, I think for me, going through the first bear market is the biggest one. And, you know, I think what was tough for me was that like there wasn't anybody to sort of lean on to say, hey, don't worry, we've gone through this before, you know. So you know, I guess folks that are going through it now, they talk to folks like me that can say, hey, how was it to go through 2017, 2018? So there was no one to sort of lean on. And you know, when I joined in the space, it was so early that I wrote on a whiteboard 20 companies that were out there that we can invest into, and we just had to choose the best ones, and then everything else was very reactionary. You know, I could just go on, I could just look at CoinDesk, and they were actually the only source of startups, because they would be going out there and people would try to get news, no one else would cover them, and that was deal flow. And then it finally expanded to what traditional deal flow is. And then of course, like, we started to see some companies come in 2014, 2015, but I think the toughest part for me was 2016. There was something called enterprise blockchain, and and yes, and you saw R3, you saw JP Morgan Coin, you saw these consortiums happening, and I really just thought that we weren't going to go anywhere in terms of trying to provide decentralized finance. It was going to go permission. We were never going to get to the internet. We were just going to stay in the intranet, and none of these use cases seem exciting to me, you know. So, you know, I thought to myself, I actually, you know, I thought about, like, you know, joining another VC fund. I thought about saying I can still look at this space, but maybe I need to diversify. Even Pantera actually, like, was thinking about starting a fintech fund. We were just like, I don't know, this might not be it. But you know, I was talking to an entrepreneur, and he was just, you know what, like, it's so early that these things just take a little bit more time. Just wait it out. Just give it another 6 months. You know, patience, I think, could work out here. I should probably go back and thank the guy. You know, I still know him, but you know, I waited a little bit longer, and then, you know, what happened was something just kind of clicked. I mean, I met someone called Olaf Carson Wee, and he was thinking about starting Polychain. And then during that time, we started to see Ethereum start to sort of, you know, launch in terms of people launching tokens, and the rest was history. Ever since that time, after I met Olaf and after we started to look at other projects building on Ethereum, you know, it just kind of built the conviction that there was something here.
Man, what a story. I actually think, Paul, you might be the kind of earliest entrant into crypto that we've had speaking here. And something I didn't even realize is you're kind of, you know, in the fund game. You know, it sounds like you actually were with Olaf when he was starting his fund. I didn't even know that. But it's crazy that, just for the students so they understand, you know, Olaf has another really big fund. And so, you know, it sounds like basically, Paul, you're kind of like, hey, man, like, here's what I think, you know, and kind of, I think having that camaraderie is so valuable and so important. And it sounds like it really helped you to keep that conviction up, which is really great. Maybe, Paul, we'd like to spend a couple minutes, because, again, you've been through in the space for so long. We'd like to do kind of a request for startups, or what you think, you know, someone who's in college, who's a student, maybe should be looking at or working on. And it can be kind of like a space, you know, or it can be a concrete idea. You're just like, man, you know, I kind of wish that someone would build this so I can invest in it, you know. So is there anything you think that's interesting for them to consider, or anything like that?
Yeah, I do have one area. I mean, look, I think a lot of great... Number one, I would say during this last bull market, the biggest delta that I've seen has been around college startups in blockchain and crypto. We've really started to see a lot more activity coming from the universities, and I think that's a great sign. And we're happy to continue to foster that innovation. We're happy to speak. We're happy to fund projects early on, and so I'm excited to sort of see this happen. You know, in terms of, you know, some of the best companies that come out of colleges is actually around social, because again, you want to be able to test with an audience that, you know, could just more easily sort of, you know, create virality. And what better way to sort of do that in a college environment where you have a lot of like-minded people that are, you know, always digitally on their mobile devices and always looking for the next cool hip thing. And so I actually think decentralized social maybe building on a platform like DeSo would make a lot of sense. And I mean, I think there's so many things that you could be doing, everything from messaging to sort of social networks to NFT creation. I mean, so I think decentralized social is a great area for someone in college to really start tinkering with and actually just sort of trying to sort of get adoption from their current environment.
Man, I love that, obviously, working on DeSo myself. But I think you're right. Something I don't think I have really appreciated is how unique of an opportunity you have as a college student to build something with this kind of little incubator of a network
Yes.
that you have, right? And I think that's a really great point. I didn't really consider that, even though I'm working on obviously a social platform. But Paul, thank you so much. Really appreciate it.